So, you want to invest in US stocks from India? Maybe you have heard about platforms like Vested or IND Money. You are excited about investing in Apple, Tesla or the S&P 500. But then you start reading about LRS limits, custodians, remittance rules, and suddenly it feels complicated. In this video, I am breaking down the entire process. Not theory, actual step by step how this works. What is LRS? Who holds your money? What are the real fees? What document do you need? How long does it take? By the end, you will know exactly how US investing works for Indians and whether it's right for you or not. I'm Himmat and let's get into it. Before we dive into details, let me give you the big picture. When you invest in US stocks from India, you are not directly buying stocks from Robinhood or Charles Schwab like Americans do. There is a layer in between. Indian regulations require you to go through a specific process or specific channel. This involves your Indian bank, Indian broker or a platform and custodians in US who actually holds your stocks. Understanding this flow is the key. So let me map it out. Here is the flow. Step 1. You, the Indian investor, decide to invest. Step 2. Money goes from your Indian bank account. This is governed by RBI rules, something called LRS. We'll come to that later. Step 3. The money goes through an Indian platform, Vested or IND Money, whatever you are using. They are your interface, but they don't hold your stocks. Step 4. Your money reaches to US custodian. These are the companies like DriveWealth or Alpaca. They are the one who actually hold your stocks in US. Step 5. The custodian buys stocks on your behalf and hold them in your name. So, when you buy Apple stock on Vested, what really happening is Vested is instructing DriveWealth to buy Apple for you and DriveWealth hold it as an custodian. Got it? Good. Now let's break down each part. First, let's talk about LRS. LRS stands for Liberalized Remittance Scheme. This is an RBI rule that governs how much money you as an Indian resident can send abroad every financial year. The current limit is 250k per year. That's roughly 2.25 crores rupees in today's rate. Now, this isn't only for US stock investing. This same 250k limit covers international travel expenses, studying abroad, buying properties overseas, gifting money to relatives abroad, and investing in foreign stocks or assets. So if you have already spent $50,000 on a foreign trip this year, you only have 200k left for US investing. Makes sense? This is a combined list. For most people like you and me, this isn't a problem. 250k is 2.25 crores. That's a lot. But if you are a high net worth individual and you want to invest say 5 crore in US stocks, you can't do it in 1 year. You would have to split it across multiple financial years. Also, important, this limit is per person. So if you and your spouse both want to invest, that's 250k each. You can both invest separately. Got it? LRS is your annual spending limit. Now, how does this work practically? When you send money from your Indian bank to invest in US stocks, your bank reports this to RBI under LRS. You don't need to do anything special. The platform, Vested, IND Money, whoever handles this. But you need to provide a PAN card, Aadhaar and declaration that you are not sending money for prohibited purpose. Your bank will ask you for a purpose code. And for US stock investing, the code is S0001. Investing in equity capital. Once your bank approves, the money moves. Usually it takes 1 to 3 days. One last thing. There is a TCS, tax collected at source. If you are sending more than 10 lakh rupees in a year under LRS, the bank collects 20% TCS on the amount above 10 lakh rupees. This isn't a tax you pay, it's a tax collected in advance. You can claim it back when filing your ITR if you have no tax liability. But just know, spending 15 lakh, bank collect 20% TCS on 5 lakh, the amount above 10 lakh, and that's 1 lakh rupees collected. Okay, that's LRS. Let's move on. Alright, so you understand the LRS. Now, how do you actually open an account? Let's talk KYC. Know your customer. To invest in US stocks from India, you need to complete KYC with number 1, the Indian platform you are using, Vested, IND Money, etc. Number 2, indirectly the US custodian, but the platform handles this. The process is pretty straightforward, but there are specific documents needed. Let's walk you through exactly what you need. 1. PAN card. This is mandatory. This is how your investments are tracked for tax purposes. 2. Aadhaar card. This is for identity verification. You will do Aadhaar based eKYC. 3. Proof of address. Usually your Aadhaar works, but some platform asks for utility bill, bank statement or a passport. 4. Bank account proof. A cancelled check or the bank statement. This is the account from which you will send the money. 5. Passport. Not always mandatory, but some platform ask for it. And 6. Selfie or video KYC. Most platforms now require a live photo or short video for verification. That's it. These are standard documents most Indians already have. One important thing, FATCA Declaration, Foreign Accounts and Tax Compliance Act. It's a US law requiring foreign financial institutions to report accounts held by US person. You will be asked from declaration whether you are a US citizen or a green card holder or US taxpayer. For most Indians, you are not. But if you are a US person, there is additional reporting requirements. Okay, that's KYC. Done. Let's talk custodian. Now, here is something most people don't understand. Custodians. When you buy a stock on Vested or IND Money, who actually holds it? Not Vested, not IND Money. They are platforms, not custodians. Your stock held by a US based custodian broker, and it is really important to understand for safety. Let me explain how this works. In the US, there are regulations requiring that customer securities be held by a registered custodian, separate from the broker's own assets. The platform we use, Vested, IND Money, Grow, etc., partners with US custodian who are registered with the SEC and FINRA. Common custodian includes DriveWealth, Alpaca, Interactive Broker, and few others. When we invest through Vested, your stock are held by DriveWealth. When you use IND Money, it could be either Alpaca or DriveWealth. These custodians are regulated by US authorities. They are required to segregate your asset from their own. Now, why does this matter? 1. If the Indian platform shutdowns, let's say Vested closes tomorrow, your stocks are still safe with DriveWealth in the US. 2. Your stocks are held in your name, not in the pooled account. This is called nominee or segregated holding. 3. These custodians have insurance. In the US, there is something called SIPC, Securities Investor Protection Corporation, which insures up to 500k per account in case the broker fails. So, your investments have multiple layers of protections. Now, a common question. Can I directly access my US account? Technically, yes, but it's complicated. Your stocks are held in a custodian account in your name, but the interface you use is the Indian platform. If you wanted direct access, you would need to transfer your account, which involves paperwork and fees. For most people, it's easier to just use the platform. But know that your stocks exist independently in the US system. How do you know which custodian your platform uses? Check their website. Most platforms disclose this in their FAQ or terms. All these custodians are legitimate SEC registered entities. So platform is your interface, custodian is your safety vault. Got it? Good. Alright, let's talk about everyone's favorite topic, fees. How much it actually costs to invest in US stocks from India. There are multiple fee layers. Some are obvious, some are hidden. I'm going to break down every cost so you know exactly what you are paying. Fee number 1. Platform fee or the subscription. Most platform charges either a percentage fee on your transactions or a subscription fee for unlimited trades. For example, Vested free plan with 0.25% per trade, or pay $50 per year as a subscription fee for 0.15% per trade. IND Money has 0.25% per trade, no subscription option. For small accounts, percentage fee are okay. For large accounts, subscription makes sense. If you are investing 10 lakh, Vested subscription 50 per year is cheaper than 0.25% per trade. Calculate based on how much you are going to invest. Now, fee number 2. Currency conversion charges. When you send rupees, they got converted to dollars. Your bank or sometimes the platform charge a currency conversion markup. Banks typically charge certain percent above the interbank rate. Some platforms charge an additional fee as markup. Total currency conversion cost around 1 to 2% typically. This happens both way. When you send money rupees to dollar and when you withdraw dollar to rupees. So if you invest 1 lakh, you will lose 1 to 2% in conversion. When you withdraw, lose another 1 to 2%. 2 to 4% round trip just in currency cost. Big hidden cost, keep this in mind. Fee number 3. US market transaction fees. When you buy or sell a stock, the US stock exchange charge a small fee. These are usually fractions of a cent per share. For most retail investor, this is negligible, maybe $0.01 or $0.5 per trade. The platform usually absorb this and include it in their fees. So don't worry too much about this one, but know it exists. Fee number 4. Withdrawal or remittance fee. When you want to bring money back from the US to India, platform charge a withdrawal fee. Currently, Vested is $5 per withdrawal, IND Money is $0. So don't keep withdrawing frequently. Invest for the long term and withdraw only when needed. Summary of fees. Platform fee 0.25% per trade or the subscription. Currency conversion 1 to 2% each way. Withdrawal fee $5 or 0 depending on the platform you are using. Total cost for one round trip invest plus withdraw around 3 to 5% in fees over time. This is why US investing is for long term, not trading daily. If you invest 10 lakh, expect to pay around 20 to 30,000 in various fees for your investment, entry, platform, exit, etc. Keep this in mind when calculating returns. Okay, fees are covered. Let's wrap up. Alright, let's summarize everything. To invest in US stocks from India, you need to understand LRS, your $250K annual limit. You need to complete KYC with an Indian platform, PAN, Aadhaar, bank details, and 2 to 5 days for processing. Your stocks are held by US custodian, not the platform. DriveWealth, Alpaca, these are regulated safe entities. Fees are real, platform fees, currency conversion, withdrawal charges, total cost around 2 to 4% over investment lifecycle. Got it? That's the system. Now, should you invest in US stocks? Depends on your situation. Invest if you want geographical diversification, you have emergency fund sorted, you are okay with currency risk, you are investing for minimum 5+ years, and you understand the fees and accept them. Don't invest if you are a complete beginner. Start with Indian investment first. You need the money in 1 to 2 years because that is too short time period. You can't handle the fee structure. 2 to 4% is significant. You are uncomfortable with foreign regulations. So my take is US investing is a powerful tool for diversification, but it's not a replacement for Indian investment. It's a complement. Find your own balance. If this video helped you understand the process, hit the subscribe button. I document my real investing journey, US stocks, Indian markets, option tradings, and everything. Real numbers, honest lessons. Drop your questions in the comment. I reply to everyone. And if you haven't watched my US portfolio breakdown video, I will link it here. I show my actual $72,000 portfolio, platform comparison, returns, everything. Thanks for watching, and I will see you in the next one. Keep learning, keep investing, keep growing.